about stocks this week. Volatile trade on Dalal Street due to global cues. We tell you what your investment strategy should be. IT stocks in focus with HCL Tech and TCS disappointing with weak Q2 earnings. We'll tell you the best picks in the IT space. And our investment advisor Chokka made a profit of 72% on his portfolio. We tell you how you can get similar returns. Hi everyone, thanks so much for tuning in. This is All About Stocks, a show that's specifically meant for long-term retail investors. So over the next half hour, we'll get you some interesting ideas and tell you how exactly you should be investing your money, which sectors and themes look the most attractive. Not just that, we'll also be answering all of your queries that you sent in to us during the week. And remember, you can take note of our email as well as our Facebook IDs at the bottom of the screen. But first up, let me bring in my colleague Ajay Sharma from our research desk to give us an update on all the action that we witnessed on this truncated week on Dalal Street. Ajay, over to you.
It was an extremely punishing week for Indian equities this time round, which were melting under global pressure. This particular week we have lost about over 1% on the Nifty, but broader markets were battered much more, about roughly about 2%. High beta trades were seen cracking most. The real estate index lost about 10% because of the DLF issue, but a lot of global related sectors back home in India like metals or even IT on the back of bad results were the ones which got clobbered in trade this particular week. Global equities, of course, are really nervous because of growth concerns resurfacing. US, parts of Europe, China, Japan, all of them perhaps not growing or recovering from the earlier recession at the same speed at which the global investors were expecting it to, really came center stage, and hence there was a massive knockdown of global equities for 7-8 days. We saw that happen. India also participated in that. However, you saw one end of the market becoming extremely resilient last couple of days, which was financials, mainly banks, because of the crude oil prices coming down very sharply, continued this week as well. And banks is the area which gets benefited, or the more correlated trade if deficit shrinks. So bank was outperforming. 10-year yields also fell very sharply in trade. Going forward, traders believe that markets are highly vulnerable for deeper cuts even from these levels. We are just down 5% from recent highs, whereas global equities have fallen much more. But going forward, this is the right time to start picking it or cherry picking stocks which you had missed out on the sharp rally. Also, the progress of the earnings season would be giving further direction to the market. In the more near term, it will be how the final tally of results for Haryana and Maharashtra elections turn out to be, which will give a near-term boost or sentiment rub-off on the market. So right now, conditions look extremely fragile for Indian equities.
Okay, thanks very much, Ajay, for giving us all of those details. So indeed, it was a very choppy week, but 7,800 was not even sustained. Let's bring on board then our fundamental expert over the next half hour. Chokka, founder, Economics Research and Advisory, joins in. Thanks very much for being with us, Mr. Chokka. Now, to start off with, it's been fairly volatile for the equity markets, but I think the big concern seems to be the fact that the FIIs seem to be on tenterhooks. They've not been putting in money as aggressively. Do you think that one should be cautiously approaching the markets at this juncture?
See, there are two facts about the FII's investment behavior in the country. Whenever they bring in a substantial amount in Indian equities, it's quite common that, taking out $500 million to $1 billion. So one should not worry too much. Only if they try to take out more than $2 billion, then it could be a cause of major concern. And secondly, as I've been saying all along, that for FIIs are concerned, the Indian equity market is only the one-way traffic. They can bring in, either 10 or 20 or 30 billion. It is very difficult for them to take out even $5 billion. So therefore, I don't see any, fear on the front of FII's outflow.
So indeed, you believe that the undercurrent for the market seems to be positive. On that note, are there any particular levels that you're looking at? We do have the Diwali week next week as well. Do you think we're going to hit some record highs?
I doubt whether we can hit the record high, in the short term, because market has already hit a record high of 27,300 for Sensex, in the first week of September. After that, we have seen some correction. Now, normally, after, people start booking profit for some time, it's very difficult to expect, another record in the short term. And global cues are also not that favorable now, right now. because there is a fear coming from Eurozone, and therefore it might take a little longer to hit any fresh record high.
I just want to talk particularly about the IT space because that's clearly taken the biggest knock this week. In terms of the results that were delivered by one of the, big names within the IT space, TCS, everyone sort of bets on this counter. It always delivers in line with what we're expecting. How disappointed were you with TCS? Do you think it's a one-off?
Definitely. I'm not at all disappointed in a big way from names like TCS and HCL, because one has to understand the fact that, on a sequential basis, we can see these kind of fluctuations, but the undercurrent for IT stocks are very strong. And first, if you look at the year on year, still they are delivering much better than what the whole, Sensex stocks are, Nifty stocks are delivering. And point two, the going forward, they would continue to do very well because, rupee is going to come under severe pressure. We need to repay more than, $170 billion of external debt. And fortunately, the oil price has crashed. We might save some dollar on that. But again, that could be nullified by, recent data point that NRA deposits in the country have fallen by about 14% year on year for April to August. So net to net, there's going to be a lot more pressure on currency, which would again be positive for the IT stocks. Thirdly, all of us know that the US economy, the way it is improving day by day, the undercurrent is very strong, and therefore that would be also positive for the IT sector.
So do you think then that given that you're seeing the outlook for the IT sector very positive, TCS has seen quite a severe correction, at these 2450 levels thereabouts, is it a good time to buy?
Certainly, for two reasons. As I said, on standalone, the sector looks good. And there are many mid-caps IT stocks, unfortunately quote higher than the leaders like TCS. Even outside IT space, if you look at many small cap stocks, they are quoting. So I think the investor should utilize this opportunity to restructure the portfolio and move on to, stock like ITC, HL Tech in this environment and get away from small caps which are overvalued.
A sector that stood out this week would have to be the banking pack. That was certainly a pillar of strength for us. And despite a lot of the asset quality concerns in the PSU banking lot, you had a lot of these names rally smartly. What's the view that you're getting? Do you see any standout performers here?
Certainly, I think one has to relook at the banking sector very seriously for two reasons. The growth is expected to pick up. All of us know. The most important thing is that, the inflation. I won't be surprised if, WPI inflation hits even the negative territory. This is what we saw post Lehman crisis. For a couple of months, WPI inflation was negative. That is mainly because of, what I call the pain for the developed world has something to offer to India. Pain for them is a gain for us, which was proven, post Lehman crisis. Once again, it is likely to be proved because we already seen whether it is a, crude oil, copper, you name any commodity, they are all either down 6 months low or 5-year low. So which is going to, ensure that our inflation, remains very low, possibly even negative territory, which would be positive for the banks, particularly for the private sector banks, even for the public sector banks, because interest rate fall can mitigate the problem of NPA by making them to make profit in the treasury operations or the provisions for the investments. So therefore, I think this is the time to relook at the banking stocks in a very serious way.
So which stocks would you identify? Would it be the marquee names that have outperformed the ICIs and Axis banks of the world, or would you even venture into some of the mid-cap names?
I would be very selective on the basis of the, the NPAs which they have shown on the books. I would again prefer a stock name like HDFC Bank, Axis Bank. In the small cap, I would prefer something like Andhra Bank. Unadjusted book value 160, the stock is still around 70. And also in SBI Associates, I firmly believe that ultimately these associate banks will be merged with the SBI or something like, State Bank of Mysore, quoting at a steep discount its adjusted book value. And again, in the mid-cap private sector, my old favorite is Karur Vysya Bank, which is going to celebrate 100th year in 2 years. So these are the banks I would suggest to relook.
Okay, that's a view on the markets, but let's focus in then on Mr. G. Chokkalingam's portfolio. And the Nifty returns from the 18th of August 2013, since he's given us that portfolio, has been about 39.8%. Mr. Chokkalingam's portfolio, in fact, has outperformed and by a comfortable margin at that. 72.5% is what it has returned. So let's just take a look at some of the stocks, in fact, that he has picked out. To start off with, there has been an ITC in the portfolio. Infosys has been selected. From the oil and gas basket, Mr. Chokkalingam picked out Reliance Industries. Quite a few mid-cap names as well, so let's just take a look at them. Bombay Burma features on the list. Neyveli Lignite, there's been an International Paper Corp. From mid-cap IT, he selected an Emphasis. Karur Vysya Bank, and what a stellar outperformer. 52% returns is what it's given. And ditto is the case with the Obama Lorry, close to 72.7%. So great going. Moil from the metals basket. Biocon may have had a little bit of a muted performance. He's also selected some other mid-cap interesting names like a KCP Sugar. And of course, we just chatted about a Claris Life Sciences as well. Now, Mr. Chokkalingam, two stocks that from this portfolio that have certainly done very well. Karur Vysya Bank as well as Obama Lorry. Are there any chops and changes? Do you think that you would continue to stay invested in these two names?
No, because many of the names we picked up recently, the portfolio has gone through a lot of shuffling in the last 1 year. Rather, I would suggest investors to go aggressive on some of the names like International Paper Corporation, Karur Vysya, Bombay Burma, Claris. Use this dip in the market and increase your allocation to these names.
Okay, that's the word of advice coming in on the overall portfolio. So there are absolutely no changes and Mr. Chokkalingam has made. Let's just walk you through some of the names and recap his portfolio. ITC, there's Infosys, Reliance Industries, Bombay Burma, Neyveli Lignite, International Paper Corp, Emphasis as well as Karur Vysya Bank, Obama Lorry, Moil, Biocon, KCP Sugar as well as Claris Life Sciences. On that note, we'll slip into a quick break right here on All About Stocks, but stay tuned because after the break, we'll be discussing stocks like OVC as well as Suzlon. Welcome back. Still tuned into All About Stocks. We still have with us Mr. G. Chokkalingam helping us figure out a strategy for your long-term portfolios. Well, let's take on board lots of queries that our viewers have sent in. First up in the auto space, we've got a query coming in on Tata Motors. Tasumi has sent this in and she wants to know the outlook for Tata Motors over a long-term time frame over the next 2 years. Now, Mr. Chokkalingam, keeping in mind that you have the global sales numbers that also came out, the trajectory for the auto sector really seems to be on the upside. What would you advise?
I would suggest hold on Tata Motors. Among large caps, it still trades around 8 PE on 1 year forward earning. And despite the problem on the domestic front, the stock has been delivering well. I am sure with the pickup in the economy, the domestic sales should also improve. So therefore, I would suggest hold on to the stock.
Okay, so the pickup in the economy can help Tata Motors see a further upside. The advice here is to stay invested in that marquee name. Moving on then, Usha Shetty has also sent us a query and this one on OBC. She says that she holds on to 500 shares. She's picked it up at a price point of 299 rupees. Should she hold on or should she sell? And we spoke a little bit about the PSU banking lot. Unfortunately, Usha seems to be losing out a little bit of money. What's your call?
I would suggest hold on to OPC. As I said, the interest rate cycle should reverse. That should be positive even for PSU banks. And OBC particularly is available at almost 30-40% discount to its adjusted book value on 1 year forward earning. So therefore, she should hold on to the stock.
So do you think that there is also potential for some of the other PSU banks? Would you advise any other names?
Certainly. I mean, most of the names they should hold on because this is at a critical time where we have seen inflation coming to 5-year low and it is going to remain subdued level for much more, longer period. So therefore, one should hold on to all the PSU banks. Of course, September results could be a little problem because most of the PSU banks could not sell the assets to ARCs. But, still I would advise that you hold on to the stock and wait for at least another 3 to 6 months to, make money in this segment.
Okay, the advice on PSU banking stocks is that you can see a little bit of dodginess when it comes to the results, but by and large, the trajectory does seem positive and you can look to stay invested. Moving on then, let's take on board the next query on one of the very problematic stocks, and that's a Suzlon. Sanjeev Sharma sends this in. Whopping 30,000 shares that he's bought at a very high price point of 38.6 rupees a piece. Now, the company may have bagged some contracts for wind power projects of late, and it has been on a winning spree, but he's bought it very close to the 52-week highs, and the counter is now almost a penny stock at levels of close to 12 rupees. I'm sure a lot of investors are facing the same plight over here with Suzlon. So what would be your advice?
Well, it is unfortunate that he bought because, it is into wind energy and a lot of businesses from Europe. The entire Eurozone is, going through a sort of recession. On domestic front also, historically the people invested in wind energy because they were getting a lot of tax benefit. Then the depreciation policy was removed and again reinstalled. But then the industrial economy is stagnating now. So therefore the company is going through difficulty. My firm view is that if Suzlon can list Senvion even to the extent of 25%, and if they can make anywhere 5,000 to 7,000 crores as the management is climbing, then this stock can turn around. There it could see a great opportunity. Or if they can manage to divest completely Senvion, then the stock can become a multi-bagger also. But then it all depends upon the management ability to unlock money from the subsidiary, which is Senvion, in the European market. But having burned his finger and lost so much of money, I would suggest that, for that matter, all the investors to hold on to the stock and just hope for management capability to unlock money from the Senvion by listing them in Europe.
Up next, Sanjay Kale has sent in this query in the pharma space on an AB Novo as well as Biocon. First up, he holds 100 shares of AB Novo. That's at a price point of 1,200 rupees. And he's also got 100 shares of Biocon picked up at 500 rupees. And now the question is, should he hold on or should he sell? So let's discuss the prospects of an AB Novo first. And what do you think he should do here?
He should hold on. Definitely there is further at least 20% upside. Ultimately, within this 5-year term of the present government, I see opportunity for, FDI in insurance, and that should be a big positive. Even otherwise, the growth expected to improve for the economy, that should also be positive for this financial service industry company. And therefore, I would definitely suggest hold. As far as Biocon is concerned, to me it is surprising that the stock is not performing very well. Recently they have given the stake in the subsidiary to private equity fund, which values the subsidiary at around 3,800 crore. Apart from that, Biocon has got close to 700 crore of cash. So the cash plus the valuation of subsidiary alone accounts for more than 40% of the market cap. And even the small mid-cap stocks are quoting much higher premium to company like Biocon. So considering all these valuation gaps and its value of investments in subsidiary and cash, I would firmly suggest even adding more quantity of Biocon at the current market price.
Meantime, let's focus in on another mid-cap counter, and that's a Tata Global Beverages. And we've got Sunil Porwal, who has sent in this query. Close to 2,020 shares is what he's got at a level of 150 rupees. And then he's also got exposure to the metals basket. There's 800 shares that he's bought of Hindalco at a price level of 125 rupees. And now he wants to know if he should hold on or if he should sell. I want to discuss the Tata Global Beverages in great detail first, because no doubt the fundamentals really seem to be very strong. The management prospects really are good. On a year-to-date basis, though, the returns are a little muted. It's been off by about 4%. What would be your advice here?
I would suggest still hold. I mean, it is unfortunate that Tata Global and other companies like ITC, they have not rewarded well. But if you see in the recent months, the coffee prices have gone up almost as high as 90%. And globally there is a huge shortage of coffee. And its subsidiary Tata Coffee, who is into coffee plantations, so it should get indirect benefit out of that. And secondly, the long-term story still remains intact. That is in terms of tie-up with Starbucks for coffee shops. So this is not the time to book these minor losses. One should hold on to it.
And what's the advice that you have on Hindalco? Because it's been so choppy for the metals basket of late. It's also contingent on the way the global commodity prices shape up. What would be your advice?
I would suggest hold on. Okay. If you look at the entire metal space, the aluminum segment is not affected so badly like iron ore or steel or copper. And secondly, the Hindalco itself has corrected, because we saw last 2 weeks there has been chaos in the metal sector across the global equity markets. And so considering the fact that it has seen a good correction also, so one should hold on to Hindalco for at least another 6 months to 12 months.
Okay, so the advice is that stay invested in Hindalco as well as Tata Global Beverages. Time to take a quick break right here on the show, but stay back, because on the other side we will be discussing stocks like Ken and Wipro with Mr. Chokka. Thanks very much for staying on with us. This is all about stocks. Well, let's take it straight then to the portfolio that has been selected for the week. And today we will be taking up Nishant's portfolio. And we have with us Mr. Chokka here to guide us through how exactly Nishant should be approaching his stocks, whether he should hold on or if he should sell some of the shares. First up, let's discuss then Cairn India. He's got close to 100 shares at a price point of close to 331 rupees. It has indeed declined from those levels. You've got the crude oil prices declining also, which seems to be a bit of a concern for this company as a whole. What's the advice on Cairn?
According to me, the global crude oil prices have bottomed out because below $80, it seems the shale gas production cannot be viable in economies like US. So that gives a lot of cushion. And even otherwise the stock trades only at around 6p on 1 year forward earning with a lot of cash. So I would strongly suggest that you can even average at current market price and hold on to 2-3 years. I firmly believe that in 3-year time frame, the stock even double. Because let us not forget the fact that India is a perennially in short supply in oil, and Cairn India is the largest oil producer in the private sector, and it produces at the lowest cost in the country. So therefore, I won't be surprised if the stock doubles also in the next 2 to 3 years.
Okay, so more upside in store when it comes to Cairn India, and the stock could even double in the long term. Meantime, Sesa Sterlite, and that one has indeed come under a fair bit of pressure on the back of all of the news with respect to the court order on the Goa iron ore mining. What would be the call here? Because luckily he's bought it at a level of close to 195, still in the money. So more to go?
May not, but I firmly believe that Hindustan Zinc can move faster than Sesa Sterlite. If you look at the Sesa Sterlite, it derives, the profits from iron ore, copper, aluminium, zinc through Hindustan Zinc, and then from oil through Cairn India. Now, if you look at all the segments, most of the segments are having a difficult time. Oil price crashed, iron ore price have fallen by almost 42% in the current calendar year itself. And to some extent, aluminum segment also got impacted. The only segment which is showing a lot of robustness is the zinc business, which it derives through Hindustan Zinc. So I would say that the investors can play Hindustan Zinc directly instead of playing through Sesa Sterlite, which has got many other segments which are not doing well now.
Okay, so preferred option within the metals basket as per the fundamentals according to Mr. Chokka would be a Hindustan Zinc instead of Sesa Sterlite. Moving on then, he's got a whopping 1,000 shares in the commodity space on a Sri Renuka Sugars, and he's picked that up at levels of 27 rupees. Do you think that, a name such as this should be allocated so much of money, and what would be your advice on Sri Renuka?
Certainly, the allocation is not proper in the portfolio. And particularly considering the fact that, the balance sheet comfort is not there, there's still a lot of debt. And globally also, within the domestic economy also, if you see the sugar prices are, at the bottom. It's a long due for sugar cycle to reverse. And of course, investing in sugar business is, possibly a good approach now, but one should choose the company which has got a very high recovery rate in the sugar industry and also the least leveraged. So, considering these two facts that, the Sri Renuka Sugar doesn't score in terms of these two variables, I would suggest sell. Moreover, if you look at the ethanol, there are reports that the OMCs, oil marketing companies, are not buying ethanol to the extent of 5% of the mandatory requirement. In fact, it seems that they have bought only to the extent of 1.5%. So, considering the fact that oil price also crashed, there is a possibility of alcohol price going down and hence ethanol price going down. So, considering all these negative developments, I would suggest sell and buy a very safe, what I consider as a very defensive stock in the small cap space, which is Ball Pharma. I firmly believe that the stock of Ball Pharma can hit around 85 level from the current price. So, therefore, I suggest this switch.
Okay, so make a switch into Ball Pharma. Meantime, Wipro at 348 rupees, close to 30 shares. You think that the upside is intact here? He's making good money.
Certainly. I think he should hold on. He should aim to get at least around 640, 650. And as I said, till March, one should hold on all large IT cap stocks and, to withstand any risk which can come from volatility in the rupee.
Okay, Nishant, hope we helped you out with your portfolio. That's the advice that Mr. Chokka has to give. And thank you so much then, Mr. Chokka, for taking time out and being with us on this leg of the show. On that note, we wrap it up right here on All About Stocks. From me and everyone that's put the show together, thanks for watching. Do remember that you can get in touch with us on Twitter as well as Facebook. Thanks for watching.